In the past few decades, the world of banking has undergone a significant transformation due to the advent of electronic funds transfer, EFT. EFT has revolutionized the way people manage their money, making financial transactions faster, more convenient, and more secure than ever before. Electronic funds transfer, EFT, refers to the electronic movement of money from one bank account to another, either within a single financial institution or across multiple institutions. EFT has become an essential part of modern banking, replacing many traditional paper-based transactions such as checks and deposit slips. The importance of EFT lies in its ability to streamline financial transactions, reduce processing times, and increase security. There are various types of EFT transactions, including automated clearinghouse ACH transfers, wire transfers, and direct deposits. ACH transfers are commonly used for recurring payments, such as payroll, utilities, and mortgage payments. Wire transfers are typically used for larger, one-time transactions, such as buying a home or sending money internationally. Direct deposits are often used by employers to pay their employees as well as by government agencies to distribute benefits. Automated teller machines, or ATMs, are electronic banking outlets that allow customers to perform various financial transactions without the need for a human teller. ATMs have become ubiquitous in modern society, providing 24/7 access to cash and other banking services. ATMs work by connecting to a bank's central computer system, allowing customers to access their accounts using a debit card and a personal identification number, PIN. When a customer inserts their card and enters their PIN, the ATM communicates with the bank's computer to verify the customer's identity and account information. Once verified, the customer can perform various transactions, such as withdrawing cash, depositing checks or cash, transferring money between accounts, and checking account balances. A personal identification number, or PIN, is a unique code assigned to an individual to verify their identity when accessing their bank accounts through an ATM or debit card. PINs are typically 4 to 6 digits long and are used in conjunction with a debit card to provide an extra layer of security. It is crucial to keep your PIN secure and not share it with anyone else. Banks recommend that customers choose a PIN that is easy for them to remember, but difficult for others to guess. Customers should also avoid writing their PIN down or storing it on their mobile devices. Debit cards are payment cards that are linked directly to a customer's bank account, allowing them to make purchases or withdraw cash from their account. Unlike credit cards, which allow customers to borrow money from a lender, debit cards only allow customers to spend money that they already have in their account. One of the main advantages of using a debit card is that it can help customers avoid overspending and accumulating debt. Since debit card transactions are limited to the amount of money in the linked account, customers are less likely to spend more than they can afford. Additionally, debit cards often have lower fees than credit cards, making them a more cost-effective option for many people. However, there are also some disadvantages to using debit cards. For example, if a debit card is lost or stolen, a thief may be able to drain the linked account before the customer realizes there is a problem. Additionally, debit cards do not offer the same level of fraud protection as credit cards, which means that customers may be liable for unauthorized transactions if they do not report them promptly. Point of sale, POS. Transactions refer to the process of purchasing goods or services using a debit or credit card at a merchant's physical location. POS transactions have become increasingly common in recent years as more and more businesses have started accepting electronic payments. To complete a POS transaction, a customer simply needs to swipe or insert their debit card into the merchant's card reader. The customer then enters their PIN or signs for the transaction, depending on the type of card and the merchant's requirements. Once the transaction is approved, the funds are transferred electronically from the customer's bank account to the merchant's account. This process typically takes just a few seconds, making POS transactions a quick and convenient way to make purchases. One of the main advantages of POS transactions is convenience. Customers no longer need to carry large amounts of cash or write checks to make purchases, which can save time and reduce the risk of theft or loss. Additionally, many debit cards offer rewards programs or cashback incentives, which can provide additional value to customers. POS transactions can also be beneficial for businesses, as they can reduce the amount of cash that needs to be handled and stored on site. Electronic payments can also help businesses keep better track of their sales and revenue, which can make accounting and tax preparation easier. Despite the many benefits of POS transactions, there are also some potential risks that customers and businesses should be aware of. One of the most significant risks is the possibility of fraud or theft. Skimming devices, for example, can be attached to card readers to steal customer information, which can then be used to make fraudulent purchases. To mitigate this risk, customers should always check for any signs of tampering before using a card reader, and businesses should regularly inspect their equipment for any suspicious devices. Another potential risk is the possibility of unauthorized transactions. If a debit card is lost or stolen, a thief may be able to make purchases or withdraw cash before the customer realizes there is a problem. To mitigate this risk, customers should regularly monitor their account activity and report any suspicious transactions to their bank immediately. Electronic funds transfer, EFT, has revolutionized the way people manage their money, making financial transactions faster, more convenient, and more secure than ever before. From ATMs and debit cards to POS transactions, EFT has become an essential part of modern banking. While there are some potential risks associated with electronic banking, such as the possibility of fraud or theft, these risks can be mitigated through proper security measures and regular monitoring of account activity. As technology continues to evolve, it is likely that electronic banking will become even more prevalent in the years to come, providing customers with even more options for managing their money. By understanding the various aspects of EFT and how it works, customers can make informed decisions about how to manage their finances in the digital age. Whether you prefer the convenience of ATMs, the security of debit cards, or the ease of POS transactions, electronic banking has something to offer everyone.